Hey, hey.
Good evening.
What's going on, guys?
Hello, hello.
Hi, D.
How you
Nice to have you
doing?
here.
Yeah, this is my first one I actually joined because I was busy last week, but I'm excited.
Right on, right on. This is going to be a good one.
Yeah.
What's up, Amanda? What's up, Mike? Looks like he's just jumping on. Cool. How are you liking the book so far, D?
Well, I'm a little bit behind you guys. I just started chapter 3 today. I've been so busy, but I do like it. I like to I've just been like taking lots of notes on the different loans that are out there for me.
Mm-hmm.
So I'm ready to proceed in that. Like I the different FHA loans, but that's before where you guys are though. That's like in chapter 2, I believe.
Mm-hmm.
So I just started chapter 3. So I'm there, but I've been really liking it. And I see, and I'm trying to apply it to what I have going on right now.
Cool.
But I'm eager to kind of know everybody else's lens and trying to hear their stories too.
Yeah, of course. That's what it's all about. Are
Yeah.
you hang on one sec. I'm gonna go grab my book because I took a bunch of notes. So let me go grab that really quick.
Okay.
Yeah, no, there's a ton to unpack once you get past those first couple chapters. But yeah, I've been taking a lot of notes. The funny thing is, for me, every time like I see these books, I'm like, man, I already know the stuff in here. I don't need to read this. Like, I already know all the stuff, And then I end up cracking the book, reading it with the book club, and I always learn something new. So it's great, man. It's great. Every single month just gets better and better, I'll tell you. How are you doing, Amanda?
I'm doing well. I'm super busy this month. Of course, the book that I've been wanting my whole life, and I'm struggling to be able to get any time to read it. And now the audio version, you have to sign up and pay monthly through the audiobooks in order to get the audiobook. And I don't do enough audiobooks to make it worth being able to spend the $15 a month plus buy books. So yeah, right now
Jimmy,
I'm on my way up north. So by the end of the meeting, I should be at the Mackinac Bridge, and so I'll be able to show you guys the Mackinac Bridge.
cool.
Yeah.
Looking forward to the Mackinac Bridge. Jimmy, you gotta share your Audible account because I know you listen to them.
Yeah, I talked to Amanda this morning and I offered
Share
to
it.
give her the password and everything. I just never followed through, but absolutely, you're welcome to it.
Gotta share it.
But yeah, the Mackinac Bridge is pretty cool, man. It's quite a sight if you've never seen big bridges, if you're into that type of stuff. It's a pretty big bridge.
Amanda, your
Go off
car.
topic.
What?
Amanda, your car is pretty loud. It's bringing in the audio. So if you're not talking,
I'm
can
sorry.
you mute it?
Yeah.
That's okay. Just mute it on your end. Love it. Jenny, I miss seeing your face, man.
Hey guys, how's it going?
It's going amazing so far.
That's
First
awesome.
2 minutes in.
Yeah.
Can't complain.
Strong start.
I know.
Amanda, the Audible $15 a month, it comes with a free audio credit for that though. So it would be $15, but you'd get a book for that.
Yeah, I think she got her free credit. She just didn't want to pay the 15 every month.
Did anybody mention like the libraries? Because that's how I get my audiobooks.
That's
Do you
how I
go
listen to a lot
free?
of stuff.
Yeah, so I use I'm trying to remember it. Like I use the Libby app, but like you connect to your local library. And so basically it'll be like a rental. So you can do Kindle books or you can do Audible books. My library is actually the one in Colorado. So obviously I can't do physical books, but like I can link to all of the audio and the Kindle books. And so I just have it sent to my phone.
Yeah, bro.
Another good resource for books is colleges that you all might be close to. Sometimes they'll offer local, if you have a local address subscription there, and it's typically free, and they have a good selection of books. Sometimes better than the libraries, the public library. But
Love it. Love it. Awesome. Plenty of ways, plenty of resources out there to get these books, guys. Worst case scenario,
good
reach
to
out to
know.
Jimmy. He'll share his Audible account.
Yeah. Yeah,
But,
I have no problem doing it.
Yeah,
Yeah,
guys.
I work too. There's YouTube. If you're okay with someone else reading it, there's full versions on there. You just can't hop around chapters and stuff, so there's some nuances, but you can still hear it.
Right.
There we go. Well, cool, guys.
Are
Yeah.
you catching that, Amanda?
Yeah, there was a lot to unpack here, so I just wanted to jump right in.
Sweet. So it was Ashley who was doing the questions this
Yeah.
evening, right?
Yeah, I'm gonna do. I told her not to worry about it, but is there anybody new that would like to do any introductions that we have not talked to, have not been to a meeting?
So I've been on the chat for a while and in the group, but I have not been able to make a meeting yet. So I guess I would be new.
Well,
Awesome, Mike.
Where are you from?
I would
So
be new as well. Oh, go ahead. I'm sorry.
Oh no, go ahead.
Oh no, I was just gonna say I'm new as well. I've been in the chat as well. So, and I'm D. So, nice to meet you guys.
nice to meet you, Beth.
Mike, do you want to tell us a little bit about yourself, and then we'll give Dee an opportunity just to tell us where you're at, what market you're in.
Yeah, sure. So right now I'm in Omaha, Nebraska, with kind of a stretch goal of getting into central North Carolina, Raleigh area. And my wife and I will be moving there in 3 years and counting. So I'm kind of a little leery about the whole halfway across the country thing. I'm a very hands-on guy, so that makes me a little leery. I'm pretty new to real estate in itself. I'm a 9-to-5 guy. I have been for a very long time. I spent 10 years in the U.S. Air Force. I was a communications officer. I got out. I've been in some kind of tech ever since. I'm an operations director for a large IT security company right now, and it's a global company, so that puts me, in meetings and things like that from 5, 6 a.m. till 10, 11 o'clock at night, right? Not constant, don't get me wrong, right? Like I have breaks in there, but I think it was probably Rich Dad Poor Dad many years ago that I read, and it's just always been in my head that I need multiple income streams, right? Like I am happy with where I'm at in my professional career and everything like that, but it just doesn't cut it anymore, right? Like I had a good friend of mine, his dad, he's kind of going on this looking at real estate with me right now as well. And he's on the same journey, right? Like his parents did everything that they were supposed to do. They did the 401k thing. They worked for the same company for 50 years and, had the, $1.7 million or whatever that formula is when they retired. And 4 years later, they had to go back to work because it just wasn't going to work. Right. So I'm looking at multiple income streams. I've launched a photography business for my wife about 1.5 years ago. That's been pretty successful. I've got another business that I've launched that's more in the small business branding, marketing, and kind of swag area, right? I've got some suppliers out of, because my company's a global, it kind of gets me a unique situation where I know people in India on a personal level, right? And so I can find these, maybe little factories that are starting up and trying to make a name for themselves to get some good discounts and stuff like that. So I am trying to launch one of those businesses. I'm trying to do the real estate thing at the same time. Unfortunately, my mind just doesn't work in half truths. So when I say I'm going to do something, it's just like, that's all I want to do, right? Like I just want to do that, right? Every second I have, I'm reading, this or that. And I've really kind of honed everything down a little bit right now to, I need to get into this. I need to get a system, right? I'm very much a process oriented guy being in the military, everything needs to be scripted and everything like that. So I'm developing a process here in my local market for, specifically flipping and burring. I've got 4 properties right now that I'm looking at, all from the same owner. I've kind of talked her into, I've talked her into it. I have some hesitations about certain things. It's not in a great area, all of the houses and things like that. So I'm going down the path. It's been great to watch you guys in the chats and everything like that. It's pretty amazing to, to see what you guys do for each other and stuff like that. And I think that's probably what I'm missing. Like I said,
Wow. Awesome. Yeah, I think you're in a good place. So definitely make sure to ask questions and reach out, because that's exactly what this group is for. So we're excited to have you in.
Thank you.
And, look forward to hearing more about your journey and what you're going to be doing.
Yeah, absolutely.
Yeah, awesome. Thank you, guys.
Really cool, Mike. I can relate to you really well with, when you set your mind to something, that's all you can think about. I feel you. I'm the exact same way. And it sounds like you got you're very versatile. So I'm glad to have you here and look forward to the value that you're going to bring to the group. Looks like we got someone new as well. Marvin, your name is under owner there, but if you would like to introduce yourself, let us know where you're from and what you do.
First, hi, I'm Marvin. I'm a recent transplant from near Gainesville, Florida, here in Jacksonville, and I've been real estate investing for some time. Just started wholesaling. I also have me and a partner have a construction company here in Jacksonville that we just qualified. I think that's it.
Glad to have you here, man. Excited.
Thanks.
Cool. Who else we got that was new that we didn't hear from? Jeanette?
Hi, yeah. I'm Jeanette, and I am located right now in Houston. We have, as a private military wife, we move around so much, and we had houses here and there. And I'm kind of like, we didn't realize what to do with them, that kind of thing. So we sold a few, and then we kept one. We have one that's located in Washington State. And I think when it comes to real estate investing, I think all I know is that every time the tenant moves out, I have to fork out so much money to change the lock, to do these things and everything else. So at one point, I just told my husband, just get rid of it or sell it. And then we also heard of Dave Ramsey, and we talked about him, and one of his representative talked to us because we were thinking, what is better? Should we sell it? Should we not sell it? Should we pay off? Because he keeps talking about having to pay off your house, your residence at least. However, the gentleman who talked to us encouraged us to not sell it because the amount that we have it right now versus how much we could sell it, we're looking at having to pay a lot of money on capital gains. So he just advised us, it's bothering. It's a positive income flow right now, and you should keep that. So for the longest time, my husband and I were thinking, what if we, pick up one more or another one? But I think we're just kind of playing it off and not quite ready and not quite sure. So recently we've just been thinking about it. So I thought maybe this is a good investment group that I could tap in and find out what do y'all do, how do you take care of that, and kind of overwhelmed thinking at all y'all that doing a lot of things. But I'm here to learn, and I'm here to be open-minded and take as much learning as I can. And thank you.
Jeanette, we're actually similar too. So I'm a military spouse. We were in Washington. That's where we moved from, and now we're in Mississippi.
Oh, cool. Awesome.
Yeah, very cool.
Well, welcome.
Thank you.
All right, guys. Is that everyone, Hunter?
I think so. Take it away, Jenny.
All right. Well, actually, I think Jimmy's going to be the one
Yeah.
that's leading this one today. So, Jimmy, take it away for
Yeah,
us.
I was also out there in Jenny, out there in Seattle, the Seattle Tacoma SeaTac area there in the military. Familiar as well. Beautiful area, really nice. It's expensive. So is that, you're saying you have a unit out there? Is that what you were saying in the SeaTac area? Did I,
For me,
where's your unit, or is it in Houston?
my unit is located in DuPont, Washington, which is right
DuPont.
outside of Fort Lewis, Washington, and McCord Air
Yeah,
Force
I
Base.
know where. Yeah, I know where it is.
Yeah.
They have some nice houses in there.
Yes,
Yeah.
the amount has gone up so much. That's why I think we were tempted to sell it, because we were getting a lot of offers.
Right.
Yeah.
But as far as rent, I mean, that's a home run right there, right? Like you're always going to have demand, right? And
Yes.
even if you're on the higher end of a house, you have your officers, you have your warrant officers, you have your senior NCOs. So if it's on a lower end house, you have your lower enlisted, you have your your NCOs, period. So you can't lose if you're outside of a major military installation. So yeah, I would have been telling you to hold it and keep the cash flow as well, for sure. DuPont's a nice area.
Yeah.
That's where Jimmy lived when I first met you.
Yeah, absolutely. Yeah, that's right. You flew out there. Yeah, you're right. We had dinner at a hibachi grill in Spanaway. You guys
Yes.
familiar with Spanaway, right?
Yes, sure is.
Jennifer and Jeanette.
That's
Yeah.
where we lived. It was in Spanaway.
Oh yeah.
Yep.
And
Actually, Sue and Greta and I drove out there.
yeah. Oh, it is amazing up there. The mountains and all that. It's amazing out there.
Cool.
So I'll introduce myself to you guys for those of you who are new. My wife, originally from Massachusetts, East Coast, Cape Cod, Boston area, joined the military. My ex-wife is from Michigan. That's how I ended up here. So moved to Michigan about 6-7 years ago. My wife's a real estate agent. So we're trying to tap into getting into real estate investing. So we have our primary, we own a duplex, and we're getting ready to try to get our third unit. So that's our current situation. And yeah, that's it. So you guys want to jump into some questions? Did anybody read the questions? Was everybody able to see that in the chat? In the chat section, or no?
Yep.
Yeah. Okay. And again, I apologize for those of you who are new, and I'm apologizing to everybody, because normally those questions are posted Monday, Tuesday, Wednesday at the latest. So that was on me. And again, I apologize. So is everybody caught up on chapter 4, 5, and 6? Are we all where we need to be? For the most part, yes.
Yes, sort of. I read this a while ago. I need to refresh.
Okay. So I want to kind of take it chapter by chapter. So did anybody have any points that they wanted to bring up about chapter 4 in the HELOCs? Those of you that have been here in the past couple of meetings and chiming in, listening to the chat, we've been touching bases on HELOCs. Did anything stick out to you guys in that chapter? Any real life situations? Have you used them? Do you recommend it?
I'll share something, a theme that I noticed really throughout the book, but it started to stick out to me in chapter 4 was how consistently he mentioned all of it, all of the funding is really, it's going to be best when you find a really good deal. He keeps mentioning finding a really good deal, So that's one thing that really stuck out to me there.
Yeah, absolutely. Yeah, I 100% agree with that. Which is becoming increasingly more challenging, right? I'm assuming that's a general consensus with you guys that are listening, trying to get deals. Yeah. Anybody else has anybody been having challenges finding deals more so than they have in the past?
Yes.
Heck yeah. It's crazy competitive right now. I actually pretty much have kind of stopped my searches on the MLS, and I'm just going to focus strictly on my driving for dollars list, vacant lists, and that kind of stuff, just because the MLS is super competitive right now. And you have very little negotiating power, it seems like, at this point in time.
Have you reached out to any agents on the MLS? So
Yeah, we have a really great agent that we've used in the past for like our duplex and for our primary home. And then in like the RIAs and all that stuff, I'm close to a lot of different realtors in this area, but it's pretty much the same. Like a lot of people are, opting out of doing inspections, they're offering over. And so I feel like a lot of properties are going to be underwater whenever this ends up tanking, because people are paying a lot over properties, or a lot over the value of what they're worth. And so I feel like in the next couple of years, people are going to be owing more and maybe not having the appreciation that they're hoping for. So at this point, I still peek at it every once in a while, but my focus is now to off market.
yeah, I can see that for sure. And you're right. I think the appreciation has to slow down eventually. The velocity can continue only so much, right? It will slow down. I've read some articles, and we can bring them up on the Monday meetings, about the projections of the next few years and how they are tapering off. 2022 was decent, and from there it tapered off in increments. But that's a different talk show, literally Mondays. Tune in 7. All right. Anybody else have anything for that HELOC section? And I hate to breeze over these chapters like that, but because there's so much in it, like we could sit here for hours with each chapter. But
Yeah.
anything that per chapter, I'm not talking the book, I'm saying for chapter 4, did anything stick out to anybody else? Does anyone else want to?
I have a question.
Yes.
Okay. What it says about the equity line of credit using it to invest in real estate. I was going to ask, has anyone in the group have experienced that, using that to invest in a real estate?
Great.
Yeah, I have a home equity line of credit on my first home, which was like a house hack duplex. It needed a lot of work. Me and my husband did a lot of the work ourselves, saved a lot of money,
Okay.
Increased the value of the property by over doubling it. So we have a pretty large home equity line of credit. We've utilized it for portion of a down payment on another duplex. It's a really low interest. It's 1.1%. So we've utilized it on that. I'm going after another property right now that I'll likely utilize it for my construction costs. And then I'll burr out and pay my HELOC back. But I am utilizing my HELOC for investing in real estate.
Yeah.
I have a question in regards to the HELOC. So I'm working on my second purchase, and which is going to be a duplex. Now, from my understanding, I was working with the lenders and my agent. The first 6 properties are rather easy to get. It's going after that, the 7th to the 10th or whatnot. So what should I look for to say maybe I need a HELOC on this one? Because me applying for the loans has been rather easy. So when I read a little bit of the HELOC, it was basically talking about how if you default, they can kick you out, and how but Jennifer mentioned the 1.1%. So I kind of took heed, maybe that's it. Maybe the interest rate is lower than what I would get regularly, maybe.
So the catch with the HELOC too is, I believe you have to be living in the property. They're not going to give you a HELOC on a property that's just an investment property.
I can jump in real quick, and if you guys are first time meeting me, I'm new to the group, but I do have a HELOC on 2 investment rental properties at this point, and it's a similar process. It's just it goes from bank to bank on what products they offer. typically most bankers are going to speak to homeowners and say, oh, okay, we're giving you a owner occupied HELOC, which you're precisely correct, where their product is owner occupied, so you have to live in it to get that product.
Why would I get that instead of a FHA or I'm sorry, or one of the FHAs? I read about a few of them. I just can't remember the name.
I mean, there's some finer points, but I would say generally speaking, if you understand the difference between daily interest rate and amortization,
Yes.
those are the two key fundamental points to whether you should choose one or the other. I would say, without knowing anything about your situation, kind of just the cards that I would play would be go get long-term financing. If you can get a lower interest rate, FHA, conventional, however you do it, already have a line of credit prepared so that you get your mortgage, and then you start chunking from month one, day one, and then you skip all the amortization. And so to me, as we get to know each other more, I've been sharing with the group that I don't do one or the other, I do both in combination.
Okay, Ryan, I have a question then. Okay, for your first, say for a first property, or you only have one property, can you get a line of credit to get a second property from that first property, equity of it?
So
You recommend?
before I share kind of my experience, how I did in answering your question, typically when you get a line of credit from the bank, you know, especially with the owner occupied, it's going to have language in your agreement that says, okay, this is for personal use only, right? You can go get a jet ski, you can go to Vegas, you can't use these funds for, let's say, a business expense, right? So it is in the language typically for your HELOC agreement to say, oh, these are for personal funds. It could be renovating your kitchen. It could be anything to do with your own home. So that's by and large the typical scenario. Now, whether you want to abide by your agreement with the bank, that's totally up to you, right? And I'm not trying to convey to you to do anything illegal, unethical, immoral, but it is at a point where I have established my line of credit against my investment rental properties, and I can draw from that account whenever I want. And I'm not asking for approval of, can I take this funds to go do a cash transaction on a house that I'm going to buy right now, right? So to me, it's once you've applied and you agree to the terms with the bank, how you use it is up to you. There's very little oversight on, where your money's actually going once you have said HELOC or personal line of credit, compared to like a loan where they're like, okay, what is the loan to value? This mortgage is going to this property, right? So.
If you guys are really interested, Ryan's done a great job in our last book club meeting. So the Thursday one and the Monday one, he's really kind of explained some of his strategies, which I think Hunter has posted on the YouTube channel. So make sure to listen to those ones, because Ryan really went in depth on how he's leveraged his properties and how he's progressed. So check those out.
Yeah. And then also, Jimmy, like I could take a whole hour just sharing the idea. How much time do you guys want to allot for just kind of the HELOC subject compared to some of the other chapters in the book?
Well, what I don't want to do is go too advanced.
Yeah.
Right. And I'm not trying to insult anybody, because I just met you last week and that was too advanced for me. And I've been studying this for a couple, So, sure. I mean, that's up to if they want to get into the amortization versus, and I understand it definitely, but Dee, I wanted to ask you if that answered your question or no, or somewhat answered your question.
Yes, it answered my question. Basically, me living in the house, if I want to kind of like fix up my kitchen, then I will look into a HELOC. Basically, his answer to me that I really understood was secure the loan, get in your house, then possibly look at a HELOC for whatever you and your lender agrees upon. Am I correct, Ryan?
Yeah. And I would even kind of just solidify that by, even before you get your mortgage, what I did, I found it prudent to, look at my credit, my report, have access to a personal line of credit, even before I went and qualified for a mortgage, because that will play into an advanced part of kind of the velocity banking strategy. We're not going to take the time to unpack that whole thing, but just suffice it to say, if you are prepared with a revolving line of credit before you get a mortgage, it's going to serve your interest better. But at the end of the day, if you're already in the process of getting a mortgage, there's really no downside to then getting your HELOC after the fact.
Thank you.
Okay. So if there's any takeaway that I want everyone to take away is that it is advantageous to be in a position to have a HELOC, right?
Yeah.
That gives you opportunities, right? So it doesn't just mean that you can borrow money against your house to get new floors, right? It means you can borrow against your money and put together a good business plan and go find yourself a nice unit, a 1-bed or a 2-bed, right? Like, it doesn't mean go buy a car or a depreciating asset. So it can be used in a plethora of different ways, right? So the takeaway is, if it's used properly, you can turn that money into velocity. It can create, just be repeated, right? So long story short, it's a good thing. Any more questions on HELOCs before we move on?
Ryan, where do you seem like maybe you have a podcast or something? Is there more information that you put out somewhere?
I am an offline analog person, and I am just now starting to develop something online and all that. So I'm in kind of like the baby stages of like putting content out. And so, yeah, like I'm definitely more of a student practitioner. And part of that is just like, hey, this is a great group. I like the mindset and definitely the philosophies that you guys have. And so it's like, I want to find the right people that think the way that I do. So part of it's like, I want to participate in this group, but then also I'm starting to like develop my own thing. So,
yeah.
Ginger, if you go to the Facebook group, I've made a post on, and this is for anybody in the group too. I made a post saying, if you're involved in like a YouTube channel, so we have a couple people doing a YouTube channel. If you have an Instagram or any social media that you want, to grow and have like people involved in, like, post it there. And Ryan posted his information, so you can follow him on Instagram as he's creating it. And then like a few other people posted their information. So let's all support each other and learn from each other. So check that out on the Facebook
What's
page.
the Facebook page called?
The Investment Mindset Book Club.
Okay.
Yeah. Post it here. One thing that I did want to touch on that we kind of briefly talked about earlier was about the difficulty of finding a deal. I think that what you believe is kind of what you will see. I don't know if I'm saying that correctly, but I'll give the example of that everyone's heard. Like, if you're thinking about purchasing like a red Ferrari, that car is going to suddenly stick out to you. So instead of saying that deals are hard to find, which good deals have always been hard to find, just looking at the numbers and also touching on what Pat said a couple of weeks ago, last year in total from ListSource, there was 2,942 cash transaction for the entire year of 2020. We did have a global pandemic, but other than that, this year, from the first 6 months, from January 1st to the month of June, there have been 4,689. I'm getting busier, and as well, Pat, he spoke a couple days ago that their company is growing and they're hiring more people. So there are definitely deals out there. Yes, it is hard to find a deal, but I think now is an opportune time. So instead of saying that deals are hard to find, yes, they're hard to find, but the deals are out there and we can all find them. Just wanted to put that out there and
Having
make
an
a change to that.
abundance mindset, guys. That's what it's about.
Thanks, Jenny.
To touch on that, it was a podcast I just listened to, was one of the most recent ones with Bigger Pockets, talking what you're saying, Hunter. Saying it's something, I'm gonna butcher it, but finding a hard deal is like telling Michael Jordan it's the game's tight and it's hard to go, win the game, right? Like, he's gonna go find an answer, right? Like you're not gonna tell Michael Jordan it's hard. It's game 7. There's 30. You know what I mean? So that reminded me of that. That was, and if anyone wants to, that was a great podcast. That guy worked with, and one of you guys may have listened to it. He worked with Michael Jordan and Kobe. I forget the gentleman's name.
Tim
Grover.
Glover. I just listened to it. Yeah, Tim Grover, and he's also
Sounds
he's on Ed
familiar.
Milet's. I actually was gonna put his 2 books in
Yeah.
the poll this
Yeah,
couple
I was
months
as
for
well. And I
July.
think we should visit those books. Absolutely. So we should.
Yeah, Relentless and Winning.
Yeah. That was a good podcast. So definitely, guys, check that out. If you're driving around, you have time to kill, check out that podcast for sure. All right, let's jump into hard money. Typically that's going to be more for, in my opinion, more for the experienced people out there. I would never jumping in my first deal mess with hard money because I'd be intimidated just because of, they call it hard money for a reason, right? I mean, you're paying points up front and it's a high interest, there's stress. Even if you finish early, which will never happen, you're still paying that extra money, right? So you make a deal with a hard money lender for 6 months and you finish the job because you found a unicorn, you finish it in a week, you still owe 6 months worth of interest, right? So
Depends, but yeah.
in most cases, right? I mean, everybody builds a rapport, right? So yeah, working relationships, everyone has different ones, but eventually, I mean, for people who do use hard money, it seems like it's advantageous because it's wheeling and dealing, it's knowing what you're doing, it's knowing that you can do it within a certain amount of time and have the confidence that you don't have to worry about getting screwed with the hard money. Does that make sense or no?
Yeah.
Has anybody used hard money? Has anybody?
I will be.
You will.
I've looked into it pretty heavily.
Marvin, what are you thinking about? Like, what
Just-
have you thought about it?
Well, my primary is a mobile home, so I can't really pull anything out of that. And we have limited funds. We'd like maybe liquidity of like 160. So and the properties here to just get into one is like 200, 300 to get into one. Then you're talking about the renovation could be, that the ones that we would do, at least 100 grand. So, I can't see any other avenue to get access to that type of funds in a short enough manner to meet the demands of the sellers now who want the money. They want the guy that's going to close now or, very soon. They can't wait on traditional financing and all that stuff, in the market that we're in, you gotta be able to jump on something and usually the first one wins, I mean, that's what I've been seeing. To be competitive, you gotta have that money quick.
Yeah. Unfortunately for those of us who don't have it, it's a disadvantage, right?
Yeah.
But
Hard money that I was finding is I had talked to several hard money lenders and I had a couple great deals, but I was looking at like complete gut jobs. And they have certain requirements on, they'll only loan so much of the value of the home existing condition, only so much of the construction costs. So, depending on your project, you have to still fit within their terms, but, definitely high interest rate, but honestly, not hard to get if you're ready to jump in and can make the interest rates fit into your
and also the interest rate, I'm sorry, but the interest rate, let's say it's 11%, right? I mean, if you're only paying for 6 months, you're essentially paying 5.5% on the money. You know what I mean? So it sounds daunting, but when you actually look at the numbers and work it, it's really not that bad.
Right.
And they're, I mean, the points that they charge is what really seems to add up. There are several hard money lenders that I'm on their email list now that I look at. Their interest rates aren't bad, and they do LLC or just regular 30-year terms for
Yeah.
LLCs, which better percentages than I've found at local credit unions. So I don't know.
Interesting. Yeah, I did not know that.
I think Marvin just made a good point, though. It's basically, as long as you're accounting for it correctly, those
Right.
fees and the numbers
Yeah.
still work, then it's a good strategy to use. But I think people get caught up or maybe don't understand all the hidden fees, or
Right.
jump in and just try to think like, oh, I'm going to get this money quick. But then if a project takes longer than expected, or something happens and you haven't accounted for those fees, I think that's where people get caught up in using hard money.
And then if I could throw in a comment as well, I'm a big advocate of the cash flow 101 game. And so I played that a lot, and it's definitely shifted my paradigm on how to look at, what is daunting, hard money. I share Jimmy's sentiment, where it is for someone that has experience at looking at the numbers so that you don't get caught, having a project take longer than it's supposed to, or what you thought it would. But definitely to Marvin's point, like definitely being able to just know that you can cover the cost. If you have the profit margin there, then why wouldn't you just pay the fee and then get out of your current situation and have more cash flow, or have, a capital gains, right? So.
Yeah.
I plan on using hard money for my next deal. And it's going to be a little bit of creative finance too. So I have some of my own cash out of pocket, but with the hard money, as Ginger mentioned, a lot of the times they don't want to lend on smaller houses, like a $40,000 house. And even with like a good ARV, they still want their total loan amount to be over 100,000 typically.
Yeah.
So, and then that requires at least 20% down on their end. So you're still looking at a good chunk of cash that you'll require for the hard money lender up front. And in that case, I'm going to partner with a private money lender.
Yeah.
And so I'll loan that private money from them and then go to a hard money lender for the rest. And the reason I feel comfortable going with the reason I'd prefer to go with a hard money lender is because otherwise I'm going to the private money lender with wanting to borrow like $150,000 out of their pocket. And this will be my first kind of BRRRR project. And that's a lot to ask from a private money lender. So if I can say I'll just borrow the 20% from the private money lender, and then the rest of the funds from the hard money lender, I'd feel more comfortable doing that. And the way that I've built my team as well is I won't be handling the renovation myself in terms of like, am I worried about the renovation going over time? I've kind of built a team in Jacksonville where they're handling the rehab portion for me. And of course, there's still an accountability level on my end that I'll have to deal with. But just the way that I've built it, I'm comfortable in tackling hard money because of the team that I have.
You'll find also with the experience that you have, it really counts with hard money lenders, even your private money lender. They'll be like, hey, she did one, was successful.
Right.
They'll open up their pockets like.
Exactly. And that's exactly right. Like for the first one, I'll have just, a small percentage from the private money lender, and then a larger percentage of the hard money lender. And then I've got experience with the person that I'm teaming up with in Jacksonville. So the experience that's where that comes from. And then as I'm looking to borrow more money from the private money lender, once I've proven the system, the private money lender that I'm working with does have access to that kind of money. It's just on the first one, it's kind of intimidating to ask for.
And be careful with the private money lender in the sense that don't overpay, because even the hard money lenders, I think they're very competitive with, so kind of watch your percentages and how much it's actually going to cost you.
For sure. Yeah. Especially right now, I have seen, especially with the national hard money lenders, the ones that lend to most of the states, they have very low interest rates right now for their hard money. It's just, of course, you have to fit their criteria for the deal, for sure.
Yeah. So you're in Canada, right? Is it Marianne? Am I saying that right?
Yeah, that's right.
So your hard money lender is in Jacksonville.
I've been looking at a few different ones, but I do
Sure.
have a contact in Florida. Yes.
Okay, so I'm just trying to figure if you're dealing with someone in Canada or if your lender is in that region there. Okay, all right. Yeah, and touching on that, that goes back to what I was saying about rapport, right? Like repetitive business, that'll get that down payment down, right? Your second deal, they might not want 20, you might say 15, right? You might get to the point where they're not charging you any points, you know what I mean? So it rapport and repetitive business. For sure. And I'm glad that you guys brought that up, touching on the hard money, because if you didn't, we would have just continued on. There's so much to learn about this stuff. It really is fascinating. Fascinating has become one of my favorite words. I swear to God, like every time I'm on here, I'm like, this shit is so fascinating. Like you guys are amazing. Like absolutely amazing. All right. Anything else on hard money? All right, let's move on. Private money. This is where it gets good, right? This is where Thanksgiving's either good or bad, right? You got to pay back cousin Tony or Uncle Joey, right? Hopefully you made some money. You didn't lose the deal. Who has borrowed private money and done a successful deal and had a successful Thanksgiving dinner?
I have.
Good. Let's hear it.
Well, basically the way I structured it was one of my best friend's little brother, he was in the military and he wanted to partner with me because he knew I was doing this real estate thing. And we basically had a conversation where it was basically disproportional of resources, where I had the deal, I'm doing the work and he just has the money. And so we basically structured it that he would be a lender, not an investor or a partner, just based on the collective resources on the table. And we basically situated a promissory note, basically a mortgage. And then I used his funds to purchase my 2 rental properties. And then I had it amortized for 30 years. And then I had a balloon payment in 3.5. Like I shared before on the other calls, I then had my Velocity banking tool set up. And so I was dealing with the payments and I was able to pay off a 30-year in just about 3 years. And so I was diligent in having all the money paid back within that balloon payment. But
so he funded the entire deal?
Yep, 100% loan to value.
So there were no banks involved.
Nope.
So you guys did your own deal. You set up your 30-year, just like a bank would, your amortization, right?
Yep.
And what did you do? Did you go to a title company to like?
So apart from me getting the funds wired to the escrow company, apart from that, everything else was a classic traditional transaction, right? We used a title company, and basically everything that would be through a regular bank, it happened. Apart from just saying, let's have a conversation, let's have agreeable terms. I'm going to send you the paperwork. You're going to wire the funds. And I love private money. I'm a fanboy of private money over hard money all day long because I am relationship minded. And to me, it's like, it's so creative. Like when you say fascinating, I can make a deal, whatever it is I want to be. I don't like the authority when it comes to working with banks and lenders and criterias. And it's like, okay, I get that you're trying to accomplish, your own liability protection, but your rules are arbitrary. I'd rather just deal with people and say, hey, let's make you the bank. I want to make my friends the bank. I want to pay them interest. I don't want to pay some third party, right?
Amen. Yeah.
Ryan, I have a question that's actually, you're kind of like changing my mindset a little bit. So my initial mindset was, do hard money first, prove your system before you get comfortable investing with private money. But you're kind of like opening up my mind here. Should I, because this person that I'm borrowing from does have the funds, and should I approach that person first and just go private money? Like, I don't know.
I mean, ultimately it comes down to I base my decision-making process as if I were working with a bank. Do I have a good credit score? Am I qualified at a traditional bank that's going to report to the credit bureaus or not? Like if I have, shit credit, I'm going to feel uncomfortable borrowing the closest people in my lives money. But
Right.
I'm doing personal credit. I'm doing business credit. I'm becoming financially literate. And to me, it's like, okay, well, I'd rather pay them the interest than pay some third party, right? So if I didn't have that ability to, have that plan laid out of like, I know how you're getting your money back. At the end of the day,
Yeah.
I already had my line of credit ready to go. So I could afford, and keep in mind, these are Midwest properties, right? So the purchase prices are significantly lower than, let's say, California or, any metropolitan area. But I had a line of credit ready to go that come year 3.5 and the balloon payment's ready. And for whatever reason happened, I had my line that I could cut him a check and I would make him whole, even if at a cost to myself, right?
Right.
So I can relate to where you're coming from. But to me, it's like, if you are improving yourself and you are responsible, then why wouldn't you ask for the bigger amount, right? If they trust you for that much, how much more do you need to prove to them to give them the full price, right?
True. No, you know what? I love what you said about why give the bank or even a hard money lender the money when you could, honestly, the person is my sister. So she just has a whole lot of reserve, like a whole lot of cash saved. And then she's got a big HELOC as well. And she doesn't want to put the time into real estate investing. But she's really wants to make that return.
Mhm.
And so it's kind of a perfect situation. And now you're making me think, like, why wouldn't I do it? And I have good credit. I would love to just even do like a personal portfolio of what I have and show that to her. Like, I'm comfortable doing that. So I do think that I'm a good client for her kind of thing.
Yeah.
So yeah, you are
And-
definitely opening up my mind to just borrowing straight. And I'd love to just pay my sister the money, like keep it, pay the family out. I'd love to do that. And she wants to do that too, for sure. So.
And not to discount hard money lenders, right? And they are a valuable tool. Like for me, when I first got started, and when I was trying to figure out how do I find deals and finding the resources, I went to 3 different people that had money that were like, that had the ability, like your sister. And I basically asked them, hey, can I hold $10,000 or $15,000, like without even actually having an intent to purchase anything, but just to kind of build that relationship, to build that rapport, and just saying, hey, look, do you trust me enough to give me $10,000 or $15,000? And none of them would go for it. So, okay, I gotta, those are the breaks. I gotta go figure out something else, right?
Yeah,
but
true.
if you already,
what kind of rates were you giving?
So-
Back in interest.
so my private money lender for my mortgage was 6%. But yeah, like, again, it's all about to me, it's not either or, it's yes and. And so if you can build relationships with hard money lenders, they're a great, tool to get you, leaps and bounds ahead to the next levels. If you have the resources, I would say opt to doing private money lending. And just to kind of full disclosure, I actually haven't had the time to read the book or get the book, and I'm relatively new, but I do have kind of experience that I can share. Does the book talk anything about retirement accounts in the form of private money, or is that not acknowledged in the book?
I think he briefly mentioned it, but it wasn't in depth.
So
Like,
when
accessing people with 401s.
401s,
Self-directed.
self-directed retirement accounts, IRAs. I own 2 rental properties in my retirement account. And again, I don't want to commandeer the call, but when I think of private money, I think of retirement accounts. I don't think of, a loved one's emergency fund under their bed or their couch, right? I think of someone that their private money is at risk at the stock market, right?
Yeah.
I would rather target someone that has, funds in an account where they could just direct the funds to my deal rather than putting it to the stock market and paying someone else interest, right? So does that connect with anybody? Is that?
Yeah,
really
you're gonna get hit up after this call because I have a self-directed IRA and I'd love to chat more.
Sure.
Yeah, absolutely.
Likewise. I'm interested.
And Ryan, like I said, I mean, I told you we could do an hour on you. It sounds like we could do 10 hours on you, you know what I mean? So I'm telling you, so listen, like we need to set up a time, Ryan, and have an hour for you, brother, and get more in depth, because you're a pretty knowledgeable guy. And like I said before, you're definite asset to the group.
Oh, I'm happy to be here. And if I could do a shameless plug, I did put it in the chat that I'm going to be doing on my Instagram live at this next hour. So if you guys want to hop on and ask questions there, I'm more than happy to field any questions. But the private money has, you know, for me, the first two houses I bought, I did it with a retirement account because that was money. I didn't have money to a retirement account or money to invest into real estate, right? To me, it was like, I can only choose either or because I had limited resources. But then I figured out, someone had shown me, oh, well, why don't you just take the funds in your retirement account and use that to actually buy property, right? And so that's a whole nother aspect to private money where one, you can use retirement account money to actually purchase real estate, not withdraw the money out and then do a deal. But then two, I did seller financing on both of those. And so another creative strategy. And then the third and fourth one, I did 100% financing because the private money that I used was more of an investment in me and the company than the deal, right? And so the way that I framed that conversation was about, you know, giving a degree of separation from the risk and liability of a property, right? It was more about, hey, like we're close and I value our relationship that I'm going to pay you out of my own pocket, worst case scenario, right?
Right. And I was just going to bring that up to you, man. I wanted to point out that what you said is, I agree with you. And it speaks to your character is, if the deal's not going good, you still pay, right? That's not your lender's fault, right? So if that deal went south, you had the integrity to say, I'm going to take care of my buddy first. So that speaks volumes. And I think that's how it should be. And as you mentioned, don't be taking people's hard-earned money that they can't afford to lose. You know what I'm saying? So if you guys do come across a deal, like Ryan said, make sure they can afford to lose it and make sure you put them before you.
Yeah. And then if I could just kind of throw out one little nugget that has shaped the way that I look at private money when I'm having conversations with people, kind of to break the ice, is, you know, when you're like, I'm going to role play, if you will, imagine with me that if I could double or triple your rate of return on an investment, would you consider investing with me on my next deal? That's usually how I break the ice into framing a conversation, because then it gets them thinking about, well, what is my return? Is it in the stock market? Is it sitting, not making interest? And then you really kind of give them an out to say, oh, well, I don't talk about money with people, especially people that are close to me. But if you're actively going from one deal to the next, they'll see that and they'll want to be included on the next one. And that's what you were saying, Jimmy, about just building rapport. I think that's the theme, whether it's hard money or private money or however you structure deals. Right. It's just being in good relation.
Yeah. I mean, you can make the argument real estate investing doesn't exist without networking, right?
Yeah, that's right.
I mean, it's all relationships, it's all rapport, and it's all repeat business. I mean, there is no real estate investing without, you know, without interaction and stuff. That's good stuff, man. There's got to be more people out there that have done some private deals. Is there anybody else?
I'll share my experience working with private money. Actually, when I did my very first wholesale deal, I was like, oh my gosh, how am I going to get the money for this after I was under contract? And I actually reached out to a hard money company that I met at like one of the RIA meetings. And since I was brand new and I was honest with them, I told them, you know, this is my first deal that I've ever done. And that was a mistake, because they're like, okay, we're going to need like 60 grand down, like 14% interest. It was insane. So I actually, after that time, I never worked with hard money again, because I had actually just met people with money. And when I ended up telling them, you know, what it is that I do, they were basically, you know, willing to put up their money for the deals. So, you know, when I showed them the deals and they saw that it made sense, they were happy to put the money down. And how we structured it was we would just close in their LLC, or if they created an LLC or a land trust or whatever it may be, which is pretty popular to do here in Florida, we would just close in their LLC and then just have paperwork written up that we were 50-50 partners or whatever the agreement was. So I think that private money is great. Used it before and plan to do it again.
Yeah, that is good. So the private money was, who was it? Friends or family? Was it?
No, believe it or not, actually, the very first one that I actually worked with and did a deal with, I actually met on the phone while I was cold calling. Believe it or not.
Really?
Yeah, it was
That's
crazy.
interesting.
So I just told him about this deal that I had, because a lot of times with the people that I call are absentee owners. So a lot of times, a lot of times it's investors who own a lot of properties, a lot of single family homes, and they'll tell me, no, but what do you have to buy? No, I'm not selling, but what do you have to buy? And that's a really good way that I find my buyers and a few private lenders that way. And then just through networking is how I found the other ones that I've worked with. Yeah.
I would have never, ever, ever thought that you would be gotten a private lender. That's pretty cool.
That
Man.
is
Me
dope.
either.
Yep.
That's like a scratch ticket right there, huh?
Yeah.
$100 bill and you're doing the laundry.
It was divine timing, that's for sure.
That's good stuff, brother.
Yeah.
I like it.
And I wanted to say, you never know who has money too. So I haven't taken advantage of any of this yet, but two of our friends we learned have quite a large savings just by talking about real estate. For example, he's a firefighter and he goes to our gym, and my husband's a big talker. So he was talking about how we're interested in real estate and that's our goal and stuff. And he said, I've always been interested in real estate, not enough to dig in, but I have about $50,000, which is not huge, but it's enough, And so he said, I have about $50,000 I just have set aside when an opportunity comes up. And that stuff is so great to know.
Yeah.
And an attorney friend of ours, same thing, said, hey, if you guys ever find yourself wanting to do a deal, just talk to me about it and I'll see if I'm in that space. But he too said he has savings. So you just never know where you're going to find it.
Yeah.
That's so true. A lot of my coworkers have been the same way. They've been like, I've got this money sitting around and they don't like what it's doing in the stock market or even in cash. And I feel more comfortable just doing, one deal, like a bird deal kind of thing first. But I definitely look forward to utilizing that in the future. And there's a lot of people that are excited about what you're doing and believe in what you're doing. And if you can show them the numbers and show them what you're doing, like, yeah, we can all win for sure.
Yeah.
Like what Ryan alluded to, even just telling people, because it's the same. I have some coworkers that we've been in the talks for teaming up because they have cash. What are most savings accounts giving you? Like less than a 1% return, less than 2%, like nothing higher. So kind of like what Ryan was saying, if I can give you 6 or even 7-8%, which is what the average of what the stock markets are giving, and then we can just keep funneling like these deals through, like why wouldn't you do it? So that's actually usually how if someone is interested, then we kind of talk about like what they're making with that money just sitting in savings. And with inflation, you're losing money if you're just keeping it in savings and not having it work for you.
Even when they have the money in the stock market, it's not like they're not selling their stock and getting the money out,
Right.
When you actually do a deal with you, they're getting that 6% in cash,
Exactly.
So it's definitely beneficial for
them. And the
them.
thing is too, they don't want to, like, they want to make more money, but they don't want to put in the work that we put in. And for me, this fires me up. I love putting in this work.
Mhm.
And so if they want to just make that passive income and make that nice return, like, yeah, let's go, let's do this.
Let me play devil's advocate here for just a minute, guys. When people put money in savings account, especially if we're talking about people that, have the kind of cash that you're talking about, savings is usually about liquidity, right? People put money in savings because you can get a certain average return over a certain amount of time, but you can sell that stock and cash in on that at a 6, 8, 10% return in the stock market for, and you can have that cash in 48 hours, 72 hours. Not a lot of people put that stuff in savings unless you need absolute liquidity for it, right? Like there's a reason that that people put it in the stock market over these, even Ally online banking is 2% interest or less, right? But I think the people that we'd be after in this situation is probably not going to have $50,000 sitting in a savings account, or that I don't know, maybe they would, but I sure wouldn't. Right, that would be something a little higher interest.
I have a coworker that has like 100,000 sitting in his savings. He's like the one that we've been talking to kind of feel like we're moving. And he's even said, he's like, I'm losing money, but he's like, he's like, I've just never known how to get started in this. And so we've been going to see a couple houses together, and I've been like showing him how to run the calculators and showing him like what those returns would look like. Actually, the one that I have under contract right now that I hope to burr out, I'm actually hoping that he's gonna finger crossed fund that deal, and then like after that, then he'll see that it was pretty smooth, fingers crossed it's smooth, and then hopefully then we can just keep recycling that money, because he's just got it sitting.
Sure. I guess my point was that, putting my salesman hat on, which, I'm awful at, but at the same time, the people that have that sitting out there is because they that liquidity is what they're comfortable with. Right. Saying, I'm going to wrap this up in a house that, I may be able to get you, 8% interest, but it's not going to happen for 6 to 8 months or more. I feel like that's an objection that you'd have to be prepared to overcome.
Right. And I was going to propose that to you guys, like what's the cutoff for a lot of you guys, right? Because as Mike was saying, you have to, I invest in the stock market and I get about 10%, right? So if Jennifer came to me, right? So right off the bat, I can just wake up, drink my coffee, spend my day, go to bed at night, and I made 10%, right? Jennifer, you got to come to me and say, I can beat your 10%, right? And you're not going to have the liquidity that Mike's referring to. I'm going to tie up your money for 6 months. To trade for that, I'm going to have to pay you 15%, right? So it's not as easy as coming in at 5-6%. And I'm not saying you're wrong, Jennifer, or anybody's wrong, because there's plenty of people that would come in and say, hey, 100K in the bank, yeah, I'll take 6%. But it's not quite that easy to come in that low with at least for me. Like
you're talking about like people that are actively trading though. You're talking about like day traders.
No, I said it. I said it in front. I don't day trade. I got X amount of dollars in the stock market, right?
Right.
They're mutual funds, ETFs, index funds, individual stocks, right? I average 10%. I'm not good.
Right, but your yield, you're not taking that out. You're not going to take out that yield. You're leaving it in there. You see what I'm saying? The difference.
Right. I don't want to touch that money, but what I'm trying to say is to entice somebody to come out of the stock market, you have to come in. For me individually, you'd have to beat me at 10%. What could you do? Is what I'm saying. Right?
Jim, can I jump in real quick? I don't mean to cut you off and interrupt you, but I got to hop off here real quick. But I did kind of want to just pass something along. The way that I assure or that bargaining chip for at least this last transaction and the conversations I have with other people prospecting lenders is that the money is insured and secured by real estate with me, right? Compared to it could disappear overnight in value. And so that's the selling point, is that if I can at least match what you're getting and have it insured and secured by real estate by doing it with me, that is to me appealing. I recognize real quickly, are they a saver or are they an investor? If they're a saver, I'm going to pass. This isn't a good deal for you because of like what Mike was saying. It's a liquidity thing. They only want to have money at their disposal. Can't argue that. Not a good fit. But if you are an investor, I can match what you're doing, double or triple whatever it is, if it is in savings, but it will be insured and secured. But I do kind of want to just pass along something that my mentor is very clear about how I use private money, and that there are lenders, there are investors, and there's partners. And so I know we're kind of hashing out kind of the upfront, how to get into private money, but more on the back end, I would like to share with the group that you need to be precise. You have to be very clear on those 3 terms, because you will get in a lot of trouble with the FTC and the SEC, no matter how you actually get there. if you're not using the correct verbiage, you can expose yourself to a liability. And so that was very profound that my mentor shared it with me, and I want to give it to you guys. So
Thank you.
just be very, very clear on how you approach somebody, because if you solicit a lender compared to a partner, and there's more things that go into it, how you describe the relationship of the actual private money transaction. So but I do need to hop off the call. I appreciate you guys for having me here. But I got to get going.
Thanks for coming, Ryan.
Thanks, man.
All right, guys.
Good to
See
see
you,
you.
Ryan.
Yeah, he actually touches on that liability concern I actually listened to one of the podcasts today that he's talking about. I'll share it in the chat here. But he does the interviews in chapter 6 with each investor. And in one of the investors' podcasts, he does touch on the specifics of actually using those terms, which was new to me. I learned that today. I had no idea that there was an actual difference. So something to keep in mind, and I'll share that podcast too.
I have to listen to that now because that's the first time I've heard that.
Yeah.
I've heard them say that on the BP podcast too, with raising money, to watch the verbiage and the language that is being used, that it can get tricky a little bit. But yeah, back to what I was saying about the percentages and everything. I was playing devil's advocate as well, because trust me, I'm going to be going to people as well, right? Because I'm going to be asking the same questions, and I want to present a decent return to them as well. So I don't want to think you guys, I was challenging you guys, just playing both sides there, because it is challenging to raise money sometimes, and sometimes it's easier for others.
For me, Jimmy, like I'm kind of similar to Jennifer, where in my sister's case, like honestly, she does just have the money sitting in a savings account because she's really good at her job and she has a high paying job. She just doesn't have the time to look into the stock. She doesn't want to. She doesn't have the time to look into it. She wants to make more money. She knows she's losing money. But she's got 6 figures just literally sitting in a bank account, which is ridiculous to most. But that's the type of person I'd be targeting, is somebody who understand, who just doesn't have the time or want to, put their own research into the stock market. Honestly, she put like $500 into the stock market one time, and that was too overwhelming for her. But if she can work with me, and if I can, what Ryan was saying, have her as like a lien holder on the property and pay her a return, and she just doesn't have to think about it, other than, of course, I'm going to be upfront and clear with her and have it done through a lawyer, and I'll be able to afford the payments back to her if I need to, then that's a huge win for her, because she just doesn't want to put the time in.
Yeah, and I think that's a good point, because that's kind of been the people that I've talked to are probably like older, either they're, getting closer to retirement. So they have like their money in whatever they want to invest into stocks and retirement accounts. They have that, but now they're getting to the point where they're saving more money or investing less in their kids and that kind of stuff. And so now that savings account is just increasing, but it's just sitting in the bank. And then the other one is that I've had a lot of conversations with people who are in more expensive markets, and then they just want to use their money in a cheaper market because then they can have like a quicker return. So those are kind of like the two, but there's a lot of people that have money sitting in the bank because, one, they don't know about real estate, and 2, they don't know much about stocks outside of like the basic investing.
So have you brought up numbers when you're talking, Jennifer, to these people? Like, have you said like, I'll give you X amount return?
Yep.
What?
Yeah. So like for the primary example, like if I could find a duplicate deal as like my duplex was, then like that guy would have been all in. So we're trying to match, like ideally I'm trying to get them like 7-8%, 10% if I could, but it just depends on the deal. But that's kind of where we've been throwing out those numbers, is like we would split it, they fund everything, and then no money in on my part, depending on the strategy. Obviously for this one coming up for the fix and flip, or if I'm going to burr it out, then I can provide maybe a little bit more upfront because I'm going to hold it for a lot less. And then if that's like more of a 10% return for them, but then I can keep reusing that money, then like I'll give that to them. And again, like I'd rather give that money to someone I know versus a hard money lender. So Just kind of depends, but yeah, that's, I mean, between 6 and 10% is what I've been talking to people for the investing.
That's what I've agreed on with my sister is 8%, especially because I'd want to pay her a higher return because this is my first BRRRR property kind of thing, or first flip if I decide to go that route. So I want to give her that guaranteed 8%. And she knows, and then another thing is too, she's secured with my job. She knows, you know, that I can afford the interest payments if like worst case scenario happened.
Yeah.
So
And it's,
can I ask you?
and it's better than the bank. So that's like the big kicker, better than the bank.
Can I ask you
ahead,
guys a
Mike.
question? Yeah, can I, just a quick question. How did you go about like broaching that subject, right? Because to me, going up to, you know, my uncle that I know's, you know, a very successful C-level guy and has been for many years in corporate America, you know, I would feel a little, you know, what's that old movie, the, you know, the Boiler Room, right? Like that, I would feel a little bit like that, right? Like, how do you broach that subject?
So I don't ever approach it where I'm coming out to people. I just talk about real estate to anybody and everyone that will listen to me. And then as soon as they show interest, then I'm like, oh, well, you know, like this is kind of how I got started. And then a lot of times people are like, oh, that's really interesting. So you kind of talk to them more and more. So I usually don't bring it up ever on like a first try. It's kind of like, I'll talk about real estate. And then again, like if someone's interested, like they'll keep following up with me like, hey, you know, you mentioned this, like, is this a good deal or whatever? And then like,
Sure.
I'll even say like, hey, can I show you like the Bigger Pockets calculator? This is how I figured out my numbers. And this is how I figure out my cash on cash return and that kind of stuff. And then broaching, like a lot of people will say like time is the issue. And so then I'm like, oh, well, have you ever thought about like, you know, being a lender or like working with a partner? Cause like, I'd love to work with you if it's someone that you trust. And so that's kind of how I've gone about it. And so, like I said, I'm hoping the one that I have under contract will be the first one that I actually partner. But it is a slow process because like the one that I've been talking to, he was really gung ho. Then he kind of like was a little skittish, then a little bit gung ho. So it's kind of just again trying to teach and talk to them about real estate. And you know, I'm always upfront. There is some risk, but again, like I'm going to guarantee their money before I guarantee mine.
So
And
you
if
build
have-
you
if
build
you
your
have
brand.
Wins,
Yeah.
if you have some wins, you know, in your back pocket, you know, it's a easy, you know, to tell them how that worked, and you know that you could do it. If you bring them a deal, for instance, they're going to want to know how that works and what you've done and what to expect, you know.
Since I got into real estate, I have noticed that just talk about it, post it on your Facebook. Like we showed our renovation for like our duplex and like so many people were so interested. Like, I didn't know you were doing that. Like I was getting like messages on my Facebook, like left and right, like, hey, how did you get started? Like, what do you recommend? And like, and so it was just kind of like teaching opportunities, but like, just talk about it because there's a lot of people who are like low key interested. They just don't know, you know, that there's people out here who talk about it all the time.
Yeah, and Brandon, I'll steal something from Brandon Turner. He said that a way around it when you're talking to someone that seems to be partially interested is just say, hey, if you ever run into anyone that is interested in partnering, let me know, call me. And so it's not pointing to them to partner with you, but then, and they can either step up or shyly, you know, or back away. It's no harm to you.
Yeah,
sure.
I'm the same way as Jennifer. I just talked to my sister about it, talked to her about what I'm doing with real estate investing. And she was super all in. She's all about it. She was fired up by what I'm doing. She doesn't want to do it herself because it's too much work for her. But, and we talked about like, you know, I can help find you a deal if you wanted to go that route yourself. And she just doesn't. It's too overwhelming for her and she doesn't have the time. And just me being fired up about real estate and showing her what I'm looking at, it piqued her interest. And it kind of, the conversation naturally went to, okay, well, let's work together. And I wanted to know in what capacity do you want to work together? And she doesn't want to be an equity owner. She wants to just be the debt or equity partner. She wants to be a debt partner. She just wants to loan me the cash, be hands off exactly. And it wasn't, I did not approach her as like, hey, do you want to partner with me? It was definitely showing her how excited I am about real estate and what I'm working on. And she kind of that's how the conversation naturally progressed.
For me, it was, I'm in data analytics. So I'm always presenting and I'm always about numbers. So I always keep me like a folder near, on my iPad or my MacBook. And when I do my hobbies, such as scuba diving, I just meet so many different people and we talk. So my cousin did a big investment in Bitcoin and he traveled all over, backpacking. So I knew he had something. I took him on a scuba diving trip, showed him all my numbers. I'm a number girl, so I showed him all my data, and he didn't want to be a lender, but he wanted to do 50-50. I'm in short-term rentals like Airbnb, and that's a lot of work. So when I present that, they get kind of scary, but because of the work behind it. But I do believe that if I was to approach the private money lender, especially me being scuba diving, I think I probably, just the way you guys are saying it, I'm sure I can get some really good lenders. But I think the contract and what he was talking about, having the precise, the precise,
Verbiage.
be precise, yeah, the verbiage of the lenders, investors, and partners. I'm going to look into that too, more detailed, because I don't want to mess that up. But I like what you're saying about private money lenders, but I will definitely look into it. But I also noticed with like your hobbies and things and just talking about it, then and just having something to back it up. Like talking is just not enough for me. I definitely need to see like some data, some numbers. I follow that. So that's my
That's why
thing.
the Bigger Pockets calculator is phenomenal. It like gives
Yes,
you like a
yes, that
spreadsheet,
is.
numbers,
Yep.
everything. And that's what I started doing, is just showing people like, look, this is what my cash on cash return is. This is what my expected appreciation is. This is what my cash flow is. And that's why that's why Brandon Turner created it, is because that's something that you can actually walk to someone and say, like, look at these numbers. This is what I'm showing you.
And it's all professional.
And then that's like a good way.
Yeah. And you could turn it to a PDF form. When I went to Puerto Rico, I took my family to Puerto Rico, and I did a lunch, and I just took that calculator, I just turned it into a PDF form and created a portfolio, all papers. It's not, I wasn't digital at all. And I was able to land a Airbnb. It was an apartment. It wasn't nothing I owned, but it's cash flow.
Awesome, Dee.
That's awesome.
Thank you.
Yeah, no, this has been great, guys. Oh yeah, go ahead.
Yeah, sorry. The book talks about having an elevator pitch and investors packet, because we're just talking about the PDF of a previous deal, and I think an investors packet is something I realize that I'm going to need to have, and that's in the book. It talks about having the mission, how you operate as a person or an LLC, how you would use private money and referrals. That's just 4 things you would have in an investor's packet. And then, talk to the person and see if you're a good fit. And I think that's a really useful tool for starting a conversation, just to talk about what you guys are talking about. I realized right when I heard that's something I would be very useful for me to have, for some of the people that I have around me. And there's a lot of people with working money. The book said that there's 22% of workers have 100,000 or more in their retirement, but there's also people that own like dental practices. And they're seeking out real estate investors because they want to get some of their money out of the stock market. They want to learn about birds. So there's a lot of people that have working money. They're looking to diversify.
Solid, Dan. Thanks for highlighting that straight from the book, man. I felt like I just read that chapter again. You're learning, dude. You're a smart guy. I love it.
The investor packet is definitely something that the investor packet is something that I want to work on building as well. I've started using the app Canva, or even just Google Docs, and starting to put together some kind of investor packet that I can just share with anyone, even who's remotely interested. you know, tell them a little bit about myself and what I've done and what we plan on doing. And you can even throw in the Bigger Pockets PDFs and add that to your presentation, just as a quick, like, you know, little snippet to provide somebody who's interested in being a private lender.
Yeah.
Resource
I think
them.
this is great, guys.
Absolutely. A resource that I love to share with you guys, I'll put it in the group chat or in the Facebook group, a PDF. When I was, just real quick, when I was 19 years old, I purchased the Fortune Builders, like online real estate school, $20,000 on my credit cards later. They give you like a credibility packet. So if anyone wants to see that, you know, as an example to go off of, I'll throw it in the Facebook group under like the attachments or files or whatever. So everyone can see like what a professional credibility packet should look like.
That's a $20,000 packet you're sharing with us.
Yeah.
I know, thanks.
Yeah, definitely do.
Cool, guys. Anything else before we wrap it up? Going a little over time.
No, just Monday, people, Monday, 7 p.m. We're going to be going over one of Jennifer's deals. If she's still up for it. I know you said you might have some numbers still to work on.
Yeah, sorry, Jimmy. This Monday I won't be able to. My dad's in town, so this Monday I can't. But then if we do it the next
That's
one,
fine too. Then that's okay. We will have somebody's deal going on Monday. If we'll just show up. We'll do something. All right, guys.
Okay. And
So
also,
I did take you guys over the bridge, and I wanted you to know on the left side was Lake Michigan, and on the right side is Lake Huron and Mackinac Island. So y'all got to go across the Mackinac Bridge tonight.
Nice.
Nice. I'll be in Lake Huron not too long. I'll be diving out there, doing an ice diving out there.
Ooh,
Yeah, I
I'm
can't
jealous.
wait.
So jealous.
Dee, I'm gonna have to message you because I really want to get into scuba diving. So I'm
Oh,
gonna
come on. The more the merrier, and you meet a lot
Me
of people.
too. Yeah, I
So
definitely.
amazing. Yeah, you'll have
Yeah, I
to
love
tell
it.
me too about it.
I was just in the
Absolutely.
Philippines last year on vacation, and I missed my
Wow.
opportunity to scuba dive there. I regret it. I need to go back and scuba dive.
Yes.
Yeah, me and my team, my diving center, we're going to the Philippines in November for a 2-week dive, all just pure diving.
Oh,
Wow.
Can't wait.
You're
very
killing me.
cool.
Yeah.
That's awesome. Good stuff.
Well, I'm learning things, you guys. I'm learning things. My mind is swimming, but it's loving it. So thank you.
well, that's the intent.
Yeah, thank you guys.
You're
I'm
Thank you.
fired up. I can't stop smiling.
Yeah.
Uh,
This is
guys,
awesome.
been
next
great.
week we're going to talk about 7 and 8. So it's going to be lease options and seller financing. I need to double check with Lydia because I think she offered, but honestly, Lydia and Hunter probably should run the 4th meeting because that's, I think, when we talk about wholesaling. So that might be a good combination for the two. But I'll ask Ryan because I know he's done seller financing. And who else has done seller financing? Because maybe they can run next. Oh, Hunter, do you want to run next week's meeting then?
Yeah, I would love to. I'm happy to. To be honest with you, I think that Ryan has done a couple more seller financing deals. I've only done one successfully.
Okay.
So, yeah, I'm
Maybe
happy
I
to
can
chime
tag
in
team
or,
it.
yeah.
Either way, then I'll reach out to you guys and we can come up with it. So then we'll have someone next week. And then we can wrap up with the wholesaling and maybe talk about, I think that the last one could then just be a catch-all for any questions or anything that's come up for things we haven't discussed or something that you want more information on. So start thinking about questions that you guys have or yeah, and I guess everybody's pretty good about putting questions in the group chat. If you're not in the group chat, please just message on the Facebook page and then we'll get you guys added to the group chat. All right.
Awesome,
And
guys.
One more thing.
Oh, go ahead, Jimmy.
I forgot. So for Monday, those of you who were there, and I put it in the chat to pick a subject property. Well, if you guys can do that, that's another thing we'll go over on Mondays, or the properties that we pick. And if anybody's here now that wants to join Monday, what I had said was pick a property in your area, real life property that you can run some numbers on, needs some work, try to run some ARV numbers, your repair, and we'll discuss it on Monday.
I love that.
Awesome. So we'll go ahead and let you guys go. As you guys know, what I really want to stay consistent on is sharing each other's goals. So for those of you who are new, you probably won't know, but you're more than welcome to stick around. You know, to publicly share your goals, it's really helped some of us in achieving them. So if you guys want to share, feel free to stay. But other than that, you know, peace out, y'all. Have a great night.
Thanks.